TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Welcome to the holiday sessions of TFNN from our good friends at Duke & Duke Trading, 100 South Broad Street, Philadelphia, Pennsylvania. And Billy Ray Valentine got the greatest Christmas present he could possibly ever get last night when we arrived in the old Asian city of Hong Kong, when they told us we're going to have a new little grandson on June the 13th. So set your calendars, folks. That's party day. That'll be 3 little boys. They'll be, what, 8, 6, and 0. Boy, that'll be really something. All right, let's take a look here at what's really happening in the real world. We're going to look at the British pound here, folks. We owe this trade here to our good friend, Mr. Z. He pointed it out, and John, I always give you the great accolades, my friend, but I mean, you missed the bottom by 5 pips. That's $30. You better recheck your work. It's rallied over 200 pips since John posted that into the room. You'll notice that that's the long-term weekly chart on the British pound. We've been bearish this since Brexit, and now it's getting ready, to turn the page. I was looking for slightly lower prices than this. I thought we had a chance with the emotionalism that Theresa May might not make that no confidence vote, that the market might get down and take out 2,400 by just a little bit. And that's where I had my order setting. And so being on the plane, I missed the uptrend. So what I would be doing now, watching this British pound from where we are, let's just quick move over to the daily, and you'll see how accurate Mr. Z's work was here. Shut the front door and raise the rent. Just give me a second here. I don't want to run into any more problems. You'll see here. There you go. You'll see his work was just absolutely spot on at that absolute low of point D. 3 ABCD patterns forming in there. That is really an important thing to pay attention to. But frankly, what I thought was going to happen is you'll notice that that 1.27 there at that 125 level, I thought we were going to go down. And just because of the emotionalism of all these markets, that we might stretch down to that 1.618 expansion. But actually, if you were following the British pound, and I know some of you folks were, we took out the previous day's low by, I think, 2 pips and immediately jumped higher. So, boy, that was telling you that there was really no selling down there. So, and that's when the turn came. And then shortly after that, I guess, I was on a plane. So I don't know when the news came out, but I imagine it was pretty dramatic. And we'll see what we're looking at right here. Now, as far as the gold market, we've been extremely bearish on gold for quite some time. You'll notice that this week on Sunday, we went up and we hit the exact number up there at that 1258 level Sunday night. We're now trading around 1246. We've had several lower tops in here all during the week. And if we can close below 1238 in the gold, that would confirm a pretty significant top in the gold market. Unfortunately, it hasn't done that. And, well, it still could, but we'll have to wait and see. A lot of the news, folks, is related to the euro and the British pound, as it should be, but the euro is still trending lower. We've said that quite a few times. It's continuing to do that. Nothing much has really changed, and that's really, let's post the gold chart here. These are up to date here. I finally got my charts up to date. I had a panic attack here about 15 minutes ago, right before the show was supposed to start. My computer just died. I mean, there was just nothing to it, and I didn't know what to do. So I called my technical expert, and he said, just check and see if it's plugged in. And what happened is the little connecting power cord between the cord and the power source for the computer was not fit tightly, and so it looked like it was plugged in, but it wasn't. So that's a good thing to look at. Okay, we got Bitcoin at 34.38 now, folks. I don't know, David, is that as low as it's been for quite some time? I don't know if it is or not. We'll have to see. We'll have to see if that's going to be it. And Marshall, I haven't had a chance to even look at the euro this morning because I was running so late, and I want to make sure that I had some of the charts that I wanted to talk about that would look relatively interesting. But what I'll do is I will check the I'll check the period for the euro when we come to the break, and then we'll be able to. Yes, you're right. 3,200 was that low. I saw that, but David, I wasn't sure where that was going to be a good low or not because I don't know if it came in over the weekend. I think the 7th would have been a Friday. It might have came in Friday night late. So that the prices that you get on those euros are all over the map. So. Not on the euros, but on the Bitcoin. But I will say this, folks, I really believe this blockchain technology is here to stay. We're starting to see some things in the world that are a little bit scary. I don't know if you know this or not, but UK, they don't take cash anymore at banks. You take a $1,000 deposit and try to put it in somebody's account, they'll say, bye-bye, no thanks. They won't take it. Unbelievable, but that's the way it's looking right now. The euro has a great deal of resistance up there at that 114 level we've been talking about quite a bit. But, folks, there's another one that's in big trouble here, I'm afraid. We got to pay close attention to this market right here because this is the crude oil market, and it is not moving nearly as much off of that 78% level that we would like. It did go up. This was from the charts over the weekend, but we did go up. I believe it was on Monday. No, it was on last Thursday. We had a $5 a barrel rally, which has been our biggest rally since it topped in October, but it's not going anywhere. And now we're trading below $51 a barrel again. We're within $1.50 of the low, and if we take out that low at 49.5, we're looking at trouble in River City from the bullish standpoint. If you're bearish, it's not a problem, but this is not acting very, very bullish as we look at these charts here this morning. So let's kind of pay attention to that. That's going to be a real interesting one as we look at these charts here this morning. Folks, I would really appreciate any questions that you have in here today because the old cowboy is running on an 8-cylinder engine and only 2 of the cylinders are working this morning. So let's pay a little close attention. Yesterday, we'll just talk a little bit. I updated this because I happen to be involved with the stock market here, and I wanted to show you what happened in the S&P yesterday. And we'll talk about this after we come back from the break, but you'll notice that after that low was put in on Sunday, on the 10th, you'll notice that we had a really strong rally. We rallied 100 pips, then we backed off to a 61% retracement, just spot on exactly. That sets up a potential, folks, for an ABCD pattern up there at 27.15. You'll notice that the ABCD pattern that took out the resistance at 26.70 suggested that should have had a correction. If you look at that ABCD correction closely, and I'm sure Dudette and some of the other folks here in the room were certainly watching that it was a perfect 382 retracement ABCD expansion, and you get a down move of 40 handles. Great volatility. You can't ask for any better Christmas presents than this. Euro coming next.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back, and we're going to talk a little bit here about the Euro contract. I hope that I posted it. God willing, we'll see whether it comes through or not, but these things don't always do what I want to, and here it is. Let's get this Euro up so we can take a look at it. Then we will look at the U.S. dollar, because I know that's what you meant, Marshall, but I'm going to bring up the Euro anyway because it's the reciprocal of it. You'll notice that we've had a ABCD patterns up there around December the 7th. We had 2 of them came in right at that 114. We had the big move down on the 11th. That was a perfect ABCD pattern, so you'd be expecting at least a 61% ratio rally back, and we got that last night. In fact, we got it 3 or 4 different times, so it should have been a really nice spot, you know, to put a short on. And on the way back down this morning, it just made the 61% retracement just a minute ago, and I'll bring this up and show you to take a look at that. You can see that we got down to that 113.40. We've rallied 20 pips since then. This is using a 15-minute chart. So as long as we don't get above this 114 level, we're still heading lower in the Euro. It looks like here from just watching this particular market unfold. Now we need to also, if we're going to be looking at some of these things, is to take a look at the U.S. dollar index, which we'll get this up so you can see it. Mr. Washington himself up there near Seattle asked us about this, and you'll notice here that we have a triple top up here, folks. It's not a 3 drive to a top pattern yet, Marshall, and the reason for that is each top has to be slightly higher than the other, and these tops are all relatively equal. In fact, what it looks like, as you can see here, I put this in over the weekend that we were looking at 97.91 as that really significant point here in that U.S. dollar index. I know we're trading above 97 this morning, but if we get up to that 97.91, you're going to have, if you update this really closely, I'm sure you'll see it, you'll have another butterfly pattern up there. It's going to be a lot of resistance at 97.91 to 98 in that dollar. That means that there's going to be a lot of support coming in at around the 112.50 level in the Euro if it gets there. So this is going to be interesting. There's a big battle going on with these things, so you can imagine what's happening with all the news that's going on. I have no idea about tariffs or what's going to happen. the real highlight of the trip is I didn't have to listen to any politics, which was really, really terrific. Now we have another question from one of our favorite people here in the den. Miss Ruby wanted to ask a question about the natural gas, and we'll get this up so you folks can take a look at it. This was a very interesting low today in natural gas. We took out yesterday's low by just a hair, took it out by about 3 or 4 points. That completed a perfect ABCD pattern. If you look at that, from the high we made on November the 26th, we came down, rallied up to a perfect 78.6% retracement up there at 468, then immediately dropped $6,000 to complete the ABCD pattern. So this is very important that we don't take out that low we made this morning here in the natural gas, because if we take that out, boy, it's going to head lower. And if you look at this, I haven't had a chance to look at it closely, but if you'll follow along with me, I think you'll be able to see it. If you'll notice the high on the 12th of November, and the high on November 26th, and the high we made back on December the 6th, those are, that's a 135 pattern, folks. You have really nice symmetry. Each one of them is a 61% retracement or 78% retracement of the other, and that led to that beautiful ABCD down there at the $4 a barrel level. We hit it right spot on. Now, we didn't quite break it. We got down to 4.005. That must have been somebody watching that level really, really closely, and we've already rallied over $3,000 in that early this morning. So that's another one that looks very, very interesting. I think if you went down to a smaller time frame and looked at the 15-minute chart, you'd probably see a really interesting pattern also unmerged, but unfortunately I haven't been able to take a look at that. Now the next one we're going to look at this morning is the same, pretty much the same pattern that we're looking at in the crude oil that we talked about. But look where we are with natural with the gasoline futures, folks. We came from 231. We dropped almost $100 a gallon, $1 a gallon in gasoline futures. And believe me, you're not seeing that at the pump, because when we were talking about this, it was around 280, and I think we're around 230. So they've given us about 50 cents of the $1 a gallon that we've broken in gasoline, which doesn't seem fair, but they don't play fair. So we'll watch this. But look what's happened here. We had a really strong rally that got us up to the 154 gallon level. Now we're trading at 143. Folks, if this was good, it wouldn't have come down that much. That's the way it looks like to me. It looks like this is just another bear market rally in a bear market. So anything below 136 sets up some really low prices in gasoline, and frankly, I don't think that would be a very good sign overall, but they've got to hold this level. It hasn't happened yet, but you know, we've got crude oil trading below $51 a barrel, and the old low was $49.50, so it only has a $1.50 a gallon cushion here, and so it's very important that you watch that. That will be, I think, really super important as we look at this. How is, I haven't been able to check anything, but how is Apple trading? Did it get back above the 170 level in Apple? That was a very key level, that 170 level, and I just wondered if it was able to snap back above that 170 level. I haven't been able to see that as it's trading at 170.29. Thank you very much, David. That's a really key level to look at. By the way, folks, I'm going to do a special webinar one of these days on Apple using the opening price. It's got some of the most incredible statistics of anything I've ever seen. You know, it's a $170 stock, certainly easily to trade versus Google or Amazon that are trading in the $1,000 range. But boy, the returns that you get on some of these things are just absolutely amazing. And your risk-reward ratio is it's about 2 to 1, but the problem, or the good part is that you don't have long strings of losers. Over a 2-year period, the longest string of losers we've seen so far has been 5, but we've had runs where it had 11 and 12 winners in a row. So statistically, it's better than 65% accurate, and it never risked more than $3 a share. And it's cat's meow when it comes to looking at the opening price and day trading for scalping. It's really good. If you'll remember, several days ago, I believe it was Monday, we posted this chart from the German Bund. And if you'll take a look at this, this is the German 30-year bond. And as you can see here, we were looking at those 3 higher highs. Marshall, that's what you want with a 3 drive to a top pattern, my friend. You want a little bit higher highs each day. That's what we got. And then, of course, this was 2 days old, but we had a big break yesterday in the German bund. So that top should be in. That is a perfect ABCD structure, as you can see, and it comes in exactly as forecast. And it's, we should be for a pretty good correction now. The last time we had that BC leg, we went from 160 down to 159. That's a great deal in the German bund. So that means we're going to go to 162 to 161. And that means we take out last week's low, and that will be interesting. But we're not going to do that unless the stock market rallies, because there's so much emotionalism here that you have to be very, very careful. So live every day in an attitude of gratitude, and may God bless.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going to take a look at where the real problem lies in the market, and that's this banking index. As you can see, it's been in a free fall this week. We're almost ready to break 90 this morning. I don't know where the opening's going to be, but it's got to hold here if we're going to get a rally in stocks, because it's pretty hard to get the stock market to rally substantially without that banking index. However, it does do that. So watch this. This is where the money's flowing, and I think it's something that we need to pay attention to. Of course, we follow Deutsche Bank quite a bit, and it's broken below that 1.618 expansion number. at 858 that we were looking at. Last time I saw a low was around 826. I don't know where Deutsche Bank is this morning. And Frank, that's the largest bank in Germany, one of the largest banks in Europe. So that's something that could be, very, very interesting here. But if we go back and just take a quick look at the stock market here. This is from yesterday. I posted late in the afternoon. If you'll notice, this is the potential ABCD pattern that we have here in the E-mini. We're trading around 2660 right now. If we could get this up another 50 points here by Friday or Monday, you got to take that one, boys and girls. That's an ABCD in a bear market. Gartley said on page 221 of the book, Profits in the Stock Market, that whenever you see an ABCD pattern in a bear market, you sell it. And when you see an ABCD pattern in a bull market, you buy it. Those are usually pretty good rules, and so that would be one that we would be watching very, very closely. The time setup on this would be a 3-day window, and if it does, that means today's the second day of the window. Tomorrow would be the third day of the window. So if it doesn't reach that level by Friday, there's a possibility that the resistance that we had up there at 2680 would probably be 2685, which was that smaller ABCD pattern. That might be it. So this is what we're watching here this morning. So, pay close attention to it. We did get a 1.5 drop in the bonds, just about a point in the notes. So that tells you that there's a temporary high or low in interest rates as bonds move off, where rates go high. So we should be starting to see rates rally again. In other words, T-bonds and T-notes start to go lower. Longer term, these are incredibly bearish chart patterns, folks. And here it is, 885 in the Deutsche Bank. Thank you very much, folks. I think the low was 826. I'm not sure, but at least it's holding that 1.618 level. And if you remember, let's just put this up here and show you the last time that we had this is from our friends at the Elliott Wave. People, and you'll notice the last time we had one of those, we had the market doubled in price. It went from 9 to 18, and then of course it's reduced in price again. But that's what it looks like. It could be a pretty good bottom there in Deutsche Bank for a little rally, but I believe that's all you're going to get. If it redoubles in price from here, you're looking at $17 on Deutsche Bank, and that would be the Christmas presents of Christmas presents. Well, not as good as the Christmas present that Mr. Valentine got, but still a very good Christmas present. Anyway, we'll be watching these as we go through, looking at some of these. Now, there's one that is really interesting, folks, and that's this silver market. I posted this. This is just a 4-hour chart on silver. We went up and couldn't make new highs up to the 78% level, and that was when gold was making a new high. There's some more divergence there, but the key to that silver, folks, is that 1384 level. Mr. Z in the room here at TFNN has been talking about that for several weeks, if not months. We did hit 1385. That was the exact 1.618 expansion, and it was also the long-term monthly 78% retracement going back 4 years. So that's a very, very important support in silver at that 1385. If we take that out, that is going to be, I think, you'd be looking at probably $12 or maybe even lower silver possibly. And believe me, folks, stop and think. Just a couple of years ago, 2011, we had platinum was trading at $1,000 premium to gold when gold was trading at $1932. Now it's a $400 discount. You could have sold platinum and bought gold when gold was going straight down and still made money. So that's an important one, to really watch. I've been asked to post a cross rate that I don't usually follow, but it's a really interesting cross rate. Those of you that trade foreign exchange should take a look at it. In fact, what I will do is I'll try to pull it up in the next 3 minutes after the next break and show you the cross rate between the British pound and the Japanese yen. These are one of the top four. The first one you look at, of course, is the U.S. dollar. Then you look at the euro. Then you look at the Japanese yen and the British pound. And if you look at the yen-pound relationship, you can see some very interesting patterns here. I'll post that for you when we get back from the break. But right now, it's it's a little too hard for me to do that because walking and chewing gum at the same time does not always work. So we'll remember that as we look through here. But as we take a quick look on the of the daily chart here in the Japanese yen, you'll notice that we were looking for the market to get to hold this low here at that 112 level. I believe we're trading around the 113.50 level right now, heading up to possibly that higher part of that channel that would take us up to around 115, almost 116 in that Japanese yen. If that happens, folks, the dollar will be soaring, the euro will be breaking down, and we'll have to wait and see. But right now we're in this really tight trading range in this yen dollar, but it'll be interesting to see where it transpires from here. But the big news, I believe, for the week is the fact that Theresa May made it through. I have some very dear friends that I talk to every day across the pond. They said she had no chance of doing it. I believe it was a 6-1 was the bookmakers where she was out on the ropes at 6-1, and they had to pay the piper because she made it through. And I was glad to see it. I kind of like her. I thought she did a good job. I know she's working her took-us off, to try to get things right. But in politics, sometimes that's not enough. In politics, it has to be about power, not about what's right or wrong. That's never happened to us here in the United States, so we've been blessed with that. Thank God there's no politics involved. This is what we like to see. Is that right, Billy Ray? You bet, Lewis. So we'll keep looking at these things. As you might guess, folks, I'm having a tad bit of jet lag this morning, but tomorrow I will be up and at 'em, hopefully at my A game. But today will be a little bit of a struggle. So we'll see how these are going. The Asian markets are holding up relatively well. And, folks, the markets were telling you that she was going to make it through. If you looked at the British pound, it was right there where, it should have been bought. The FTSE had just made a beautiful ABCD pattern to the downside. All of that was lining up to say that, hey, this looks like it's going to be something interesting. If you remember November 6th of 2016 with the Dow down 880 points, limit down, it looked like HRC was going to be a flat-out winner until Florida changed. And when Florida changed, the market started to rally. The Dow rallied. I was watching it. The Dow rallied immediately 300 points. When Florida came in, it never looked back, and didn't look back until October the 1st of 2018 when we made that top up there. So, and I don't believe that top's going to be taken out for quite a few times. We'll see. It will be in the new babies era, but not in mine. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
All right, folks, we're back, and I've posted the long-term chart of the pound versus the yen. As you can see, this is a pretty bullish chart from the pound versus the yen perspective. We made that 50% retracement here last year. This is a weekly chart, so it's just, well, well, actually it was August. Sorry, this is the weekly chart. So it was made in August. But if we take a look at the daily, this is what's interesting here. And I want to thank our friends across the pond for sending it to us, because you can see here on the daily chart, and it's over the past year, that we had a really beautiful Gartley form here this week. About 3 days ago, we've rallied about 250 pips off the bottom with a real strong power. So that tells us that we should get another 5 or 6 cents in that. And long term, that could be something that would be, very, very interesting to take a look at that. So I think it's important to watch that unfold if we in fact do this, get this pattern done. So far this morning, I believe we started off, we're still rallying okay. We tested those that really key level at 26.70 was the 61% retracement rally off of that bottom. So we need we need that S&P to get above 26.70 to retain its bullish stance. That's my opinion, of course. But the important key spot is at 26.32. That's down 30 handles from where we are right now. If we get below that today, folks, it's not going to look very good on Friday, I'm afraid, because that means that ABCD that we're level that we're watching at 27.10 may not unfold. So 26.70 is that key level in the E-mini, and if we don't get above that, then that'll be I think that would be relatively negative. Now the euro is already starting to attack the 61% retracement down here at 113.40. Below that, you're looking at that test at 113 again, and below that you're looking at 112.50. So the dollar is still making that 3-drive pattern, Marshall. So keep an eye on that. That comes in just a tad under 98 in that U.S. dollar index, and if the time is correct, it should happen between Friday and Monday. So again, we'll be looking at some big fireworks. And of course, with the Christmas holidays here, your volume is slowing down, and that means that you're going to have greater volatility. As volume drops, volatility increases, fewer traders bid to get their prices. In fact, that's what we're trying to keep an eye on that. The question about the grains and the tariffs. We had Simon only on Monday. He believed that markets had a trending higher. We had a pretty good rally in beans. They're down about 20 cents from the high yesterday after a little bit of a sell-off here. But the overall picture of the grain still looks constructive. And as long as we can do that, I think we are going to see better prices. We've got 3 months supposedly to fill out this tariff thing with China. Anybody's guess what will happen, and anybody at this end is not guessing. So right now it just looks like they're holding their own. The one thing you have to remember, folks, that oil is indigestible and gold is indigestible, and they have to have food. So soybeans have an inelastic demand. No matter what the price is, they got to use them for something. So let's pay attention. Had a question here about the importance of that 2670 level. We're now down 8 cents in the S&P on that. All that is, folks, if you will just do the 61% retracement of the high from we made yesterday at that 2685 and then come down 40 handles to 2646, you'll draw that in and it comes in at 2670. That's the exact 61%. I could post it, I guess, couldn't I? Shut the front door and raise the rent. God bless this technical stuff. Let's see if we can do this here. 1 second here. I don't want to do it wrong, because if I do, Mr. Al will be wrong, and I don't want Mr. Al to be angry with me. Okay, you can see that number that we're looking at here, so that'll be an interesting one to take a look at. The other alternative is to listen to Dudette. She does some great work in there, as does Mr. Z and a whole bunch of other folks. So the Tiger Den has a lot of assets in there, folks. And if you're looking for help during the day and you're lonely, go into the TFNN Tiger Den. You're going to get some really good people giving you some pretty good ideas of what they're looking at. So I think that'll be something that you want to be watching very, very closely. I think I posted the gold chart a little bit earlier, but let's just double check it. Here it is. We'll get it up here to take a look at it. This is what we were looking at for last night's action, and we did, make a little attempt at the rally. Ruby's asking me, a strong dollar is bad for banks. Ruby, I don't really know if that's the case or not. That's a really good question. I'm going to write that down. I'll have that answer for you tomorrow. What I'll do is I'll overlay the banking index over the dollar index, and we'll see if there's any correlation there. There should be, because it's money. And I would think that would be a pretty good correlation. There's some pretty smart people, one of them over in Las Vegas, that I'm sure is going to give me my answer by the time the show is over. And I certainly appreciate that, TB, if you're listening, because it would be a big help. That's one of the advantages of doing this radio show, folks. You meet such great people. A few of them throw vegetables at me, but I like salad, so that's no big deal. Anyway, I think there's probably a good correlation there, because if you think of one being the dollar, in other words, they make money off dollars, that's got to be a very high correlation. So that's a really good question. I don't have time to do that now, because I have to upload the dollar index versus the banking index and see if it would be, we'll see. I like the cherry tomatoes, Mr. Z. Those are my favorites. In fact, when I was a little boy growing up in Indiana, my grandma and my great-grandma had a fabulous garden of everything. We never bought vegetables. They all came directly from the garden. Well, we couldn't buy them because we didn't have any money, but we always ate good. And fact is, had a great childhood. I think I mentioned to you, I had my cousins come out to Arizona to see one of my other cousins who's in a nursing home and not doing very well. But they came out, 3 of them, and gosh, we had a really good old time talk about the childhood. And Sarah was there, and oh my God, they told stories about me I didn't want to hear. But it was rather funny. I have a picture of when I was 3 years old, and my nieces. My cousins are a little older than me. They put toenail polish and fingernail polish on me and dressed me up like a girl, and that doggone thing traveled with me forever. And it was in the yearbook for college, and also the yearbook for high school. But that's all you can do. And I still have the dress, but it just doesn't fit anymore. All right, let's take a look here. One other thing we want to get in before we come to the break. This is where we were in the euro last night, and then you notice now we've broken down to that 1340 level. You're going to see the important. Yes, it was a black and white photo. You're absolutely correct. But you know what those rascals did? They did a computer enhancement with all this technical stuff and made it into a color one. So that's okay. Somebody say, hey folks, you got to be careful with this social networking, because everything you say is there forever. Every word you say, no matter what you say it or when you say it, it's going to be on there. So remember the words of George Washington. If you tell the truth at 10, you won't have to remember what you said at 12 or 2. That's 10, 2, and 4. That's Dr. Pepper. I don't know who said that. Tell the truth. I might have been Abraham Lincoln. Tell the truth at 10. You'll not have to worry about what you said at 2. So that's a pretty good idea. I have to double check that one too. But I will get that answer for you, Ruby, on the dollar index and the banking index. I hope to have it at the break, but we'll see. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted the chart of the dollar index versus the banking index, and Ruby, you hit that spot on. It's really got a high correlation. As the U.S. dollar rises, remember this is an inverted one, so when you see that red line going down, that's actually the dollar going up. So when you see the dollar going down, that dollar index is going down. As you see the dollar go up, the dollar index, as you see the dollar index go up, the banking index is going down. So there is a high correlation. That means if we break out above 9,800 in the dollar index, this banking index is going to be toast, and it's already making lower lows than yesterday. So that's another one that is going down. Mr. G just reminding us that Christmas S&Ps roll over today to the March contract. The final day for options expiration is the 20th, so pay attention to that. But actually, you should already be trading the March contracts and also bonds, currencies, and the E-mini, S&P, NASDAQ, and Russell and also the Dow Jones, because that's where the action is going right now. So we'll be paying really close attention to that. Tomorrow we're going to focus a little bit more on the euro, because I believe we're at such a critical level where we could start to see, if this breaks below that 112.50 level in the euro, we might start seeing a cascade to the downside. So that's something that we might want to keep in hand. Folks, if we don't make this 2710 in this S&P here by Friday, there's going to be a really negative pattern here. This is nothing more than another 120-point rally off the bottom, and then another test a little bit lower. So it's just not looking very good. And Christmas time, it's usually rallying, and the markets are not doing that much. And you're starting to see a little bit of bearish news come out of some of these technical stocks like Apple and some of the others. And how did Facebook handle their thing? Is Facebook above the 140 level again? Did it get above 140? Well, we're ending the show anyway, so live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!